Hello and welcome to financialexpress.com. I'm Shaleen Agrawal. Today we are talking about how a government can use REITs and InVITs to augment infrastructure financing through the upcoming budget 2023. We have with us Kranti Mohan and Santosh Janakiram, partners at Cyril Amarchand Mangaldas. Kranti, Santosh, thank you so much for joining us.
Thanks, Shaleen.
What has been the role of REITs and InVITs in infrastructure financing in India so far?
See, since 2014, when InVITs and REITs were introduced, they have over a period of time evolved quite significantly, and today they provide a strong support or are an important tool for infrastructure financing. If you see, we have almost 14 InVITs today and 3 listed REITs, and they have become an important channel for attracting foreign investment into these two capital heavy and capital incentive sectors, that is infrastructure and real estate. Over last couple of years, they have also become an important tool in government's national monetization plan. A couple of years ago, Power Grid launched and undertook the initial public offer of its InVITs, comprising transmission assets. And then last year, National Highways Authority of India sponsored an InVIT and listed with a small pool of assets, which, considering the success that government and the transparent price discovery that the government was able to achieve with that monetization, they have followed it up with round 2, which was financed. The round 2 asset acquisition was financed by a mix of an public offer of debt and institutional placement, along with some preferential allotment and infusion of capital by the sponsor itself. And now, as we speak, the government is already looking at round 3. So again, from both private, public side, whichever way you look at it, they have proven themselves as an important tool and an important support for the growth of our economy by providing critical and crucial financing to infrastructure and real estate sectors.
The way you say it, with the REITs and InVITs, has the government finally found the very crucial missing piece in the massive infrastructure financing gap?
I think they are not the be all and end all, but yes, they are one part of and a very important part to complete the entire jigsaw of, if I might say, of infrastructure and real estate financing. And again, they've proven themselves both on the private side and on the government side, and lend themselves very well as an adaptable tool, and which also provides various structuring and other options to address a diverse set of investors. Of course, the core remains long-term investors like pension funds, insurance companies, whether overseas or Indian, but it does attract a wide pool of investors.
With the ambitious goal of infrastructure financing that government has for the next 5 years and then next 10 years, how big a part can REITs and InVITs play? InVITs specifically.
I think maybe Santosh on this, if you would like to add, but my 2 bits is that they are going to be very, very crucial and very important in attracting the capital or addressing the capital needs in these 2 sectors. But Santosh, if you would like to.
No, I mean, I entirely agree with you, Kranti. I think they are very critical. I think I like the way you said it. I mean, there is a missing piece. I think you said it, Shaleen, that there is a missing piece that is kind of filled up by this. If you'll see, before this, several people tried doing public issuances of long-term infrastructure assets, trying to find a way to achieve both liquidity and development capital, right? Both of it. InVITs seem to have met that requirement. You have long-term investors who have the capability to get yielding returns, but still have liquidity in the market. That's a great combination to get. And we've seen yield cos, we've seen in the US, we've seen business trusts that Singapore and Hong Kong tried as well. Singapore more successfully. So this model kind of, has hit a bit of a sweet spot. And I think we are still in the process of getting there, just to be clear. I think we've got our regulations down. We understand what we want to do. We know how the public markets need to work. We have the governance frameworks in place. Now it's a question of, showing that this is a viable long-term model. Till now, it's worked as a viable capital model. We need to just demonstrate that it's a long-term model. And I think the first few InVITs are coming on to 6-7 years now. So I think that's a good demonstration. What does that mean? That means that if you have any long-term investor in this country, be it a pension fund, be it an insurance company, an AMC which has capital, be it overseas sovereign money, we now have the capability to channel that not just into a long-term asset, but also into a yielding asset, but still having the flavor of long-term capital. So this mix, I think, is going to be very, very critical as we go along. We have seen, over a period of time, that what India needs for the infrastructure sector is actually long-term capital. There is always this tension that happens between what a private equity investor wants out of an investment and what a strategic investor wants out of an investment. What this does is kind of bridge that gap. So you have someone who can develop it. You can have someone who can finance it in the short term, be it a private equity or be it other forms of short-term capital, which can then be operated, taken over, and run by long-term capital. So it's actually a very, very good tool from that point of view. The question is, how quickly can we get to this place? So for us to be able to InVITize, so to say, you will need this bulk of good quality assets that are, that have operational capability or in operations and have a reasonably decent track record. Kranti, you can talk about how that works in a capital raising context. But how quickly can we get to this size? And therefore, how quickly can we develop more assets which get to becoming InVITs is going to be an important factor.
For a retail investor or for even a high net worth investor or even a small institutional investor, investing in real estate physically, buying land or buying property versus investing in REITs, purely for investment purposes, not for owning the property, which one is better?
It's a difficult question because everyone has their own investment objectives. But if you were to just look at it from a small person's perspective, say an individual's perspective, generally REIT, investing through a listed REIT or InVIT, would present them with a small ticket size to buy a infrastructure asset, just impossible for an individual, but you can participate in it by buying InVIT units. So first, there is an opportunity which never existed. Second, from a risk perspective, it's slightly less risky because there is governance standards. As an individual, I may not have the skills and capabilities to evaluate an asset. You have an investment manager or a manager in case of a REIT who will be running these assets, which have well-established track record. So to a certain extent, and long-term concession agreements or underlying agreements which give long-term cash flows. So therefore, from a risk perception, they will be lower risk than investing directly in real estate or infrastructure. Then lastly, liquidity. This investment in units of InVITs or REITs would be way more liquid than investing in an actual real asset. So from all these perspectives, it probably from a individual's perspective, it might seem better and actually in infrastructure possible to invest in infrastructure. Otherwise, you, I, or any individual can't invest. We can't buy a road, right? So
you began this answer by saying that it's a difficult question to answer. Let me ask you, what can the government do, or what should the government do to make it a very easy answer? That investing in real estate, of course, go for REITs. It's easy.
So I think, see, from that perspective, government has already done enough. We have a amazing governance standard, well respected globally. Because if you look at the investors in InVITs or REITs, they are marking global investors present there. So the governance standards that the government set out to achieve through InVITs and REITs, I think they have established themselves. Um, Even in terms of providing flexibility, that is also there. One thing that can benefit, of course, is a consistent long-term policy, not changing or tweaking some of the rules along the way. But again, that government has to balance, because as we learn, this is an evolving product. As the regulator and the government learn about newer things, newer problems to address, they have to fix it also along the way. But there has to be that optimum balance, not to touch something or try to fix something that's broken. But of course, there will be parts that will have to be given better shape. I think that's largely it. But more than anything, I think this product requires a little bit of more investor education, a little bit of push on that side. But in the larger scheme of things, I think government has done well. I think as a product to make them successful, there are a couple of points, especially on the REIT side. And Santosh, maybe if you want to highlight on the debt financing piece where things could change or possibly be implemented for REITs, which will make the product itself better and therefore encourage more investors to invest.
Yeah, I think the two big things that come to mind obviously are the capability in banks to lend. And there has been a general level of reticence. As you know, the RBI is not a big fan of real estate lending. To demonstrate that this is more a pool of revenue and capital that comes out of things like lease rentals, rather than actually being what traditionally is the perception of what is a real estate asset. That's one. The second is the capability to raise foreign debt capital. Bonds have been permitted, where you can have FPI pools of debt capital come in. But perhaps the enabling some of the external commercial borrowings, ECBs in this sector, which have been such a huge opportunity in the other areas, right? Infrastructure, including renewables, including roads, including transmission, has benefited from large overseas banks, large overseas financial entities who are kind of willing to lend, dollars or converted rupees for that purpose. So I think these are two big things that stand out as things that could be done over the next few weeks or months to enable a little more on the debt side for REITs.
That's a very interesting point. But see, doesn't that actually defeat the original purpose, which was to commoditize REITs and InVITs, in the sense real estate and infrastructure, so as to make it more accessible to retail investors, individual investors, in forms of units. If you allow big debt financing and through ECBs, aren't you kind of crowding out the investment from smaller investors?
Why would you say that? Because if you were to look at the basic philosophy of long-term debt versus a unit investor is effectively taking an equity view, or if you want to call it a little more nuanced, a fixed income equity view on the underlying asset. Whereas the long-term debt provider is actually looking at it as a long-term debt capital. So the cost of that debt capital is always going to be cheaper than the cost of that equity capital. That's one. So what does that mean? That means that the same level of equity capital you will be able to REITize or InVITize more assets with the same level of equity capital than if you were not to permit it. So from that point of view, the quality of the pool, the ability of the pool to get better is only increased. Debt providers also, the levels of diligence that they do on an ongoing basis for acquisitions, for new assets, for the way they look at it is, they look at it with a very, very, with great deal of minutiae, which means that the retail investor benefits from that level of kind of, capability that the long-term lender provides. yes, there have been real estate players in the sector to answer a question that might come to people's mind, where real estate players have have seen some difficulty with some of the IBC side. But we are not talking about development residential assets. We are talking about lease assets, corporate held assets, which have high quality customers, who are paying the lease rentals. So the governance framework that SEBI has already has built in a lot of those safeguards. And in fact, this can only be an enhancer.
Yeah, and I would think, just to add to what Santosh said, then it'll, with access to debt, it'll increase the returns for investors on their investment in InVIT and REIT units. And that's one thing. And second, all the risks that come with debt, because one of the objectives also was to reduce the pressure on Indian financial institutions and banks, and attract capital from other than those sources. So what we're talking about right now is also to a certain extent foreign debt. Plus, it has to be an optimum balance, and to address any concerns that people will developers or others will over leverage. SEBI has put a cap on how much leverage an InVIT or a REIT can have in normal circumstances, capped at 49%. So that also while it gives the upside to investors in terms of better return, it also provides them the protection that there is unlikely a bankruptcy or that kind of situation would happen, because you're not undertaking the execution risk. The asset is already completed and revenue generating.
Why did the government make a move to make it mandatory for listing of REITs and InVITs?
So right now, on REITs are mandatory. It is mandatory to have REITs listed. On InVIT side, there were three types of InVITs. Two were listed, which is either you list through a public offer or a private placement. And then there was an unlisted InVIT structure also. What government over time has seen how it progressed and maybe done a cost benefit analysis of it. And now they have notified, I think in December, SEBI notified and its board approved that they will wind down the unlisted InVIT structure. So effectively now, I think in the next financial year onwards, we will only have listed InVITs and REITs.
So how will that move change the shape or form of InVITs?
I think in any case, majority of InVITs today were listed already. We only have out of, I think, 14 or 15, only 3 InVITs which are unlisted. That also because of specific consideration. But a listed product is, in any case, seems better. And one of the fundamental things is liquidity, easy ability to easily divest your investment in an asset. That comes with listing only. So I think having the listed ones, it is important that they should have listed ones. Also coupled with the fact that you are getting some tax incentives, etc. So therefore, they should percolate to a larger set of people and should be easily tradable.
Any case for introduction of any such scheme?
It's always good. As a taxpayer, I would say yes. Why not? It's always good. But I think in a larger scheme of things, there has to be some balancing out on increasing the tax or removing taxation from any sort of investment, right? So therefore, government may have to take a more nuanced policy view on it. But as a taxpayer, I would always say yes, remove as many taxes as possible. It'll make the investment more attractive for me. Any thoughts on Santosh on this?
No, I'm not sure the thought process behind. If I were to take a slightly different approach to answering your question, the InVIT itself is a pass-through vehicle. The tax is in the hands of the investors, which means that effectively multi-layer taxations multi-layer taxations are something that need to be stopped, which is something that is being largely achieved. But to say that returns from this should be tax-free or I think is a stretch. I think there is more than enough that is being done for the structure itself in many ways to enable it. That's one part. The second part is, frankly, if you are talking about the government doing this, why do they need to do this for a large part of the investors who are actually going to be foreign capital, foreign funds, etc., when you're already providing a layer of protection? I can understand some of the benefits for Indian citizens subscribing to infrastructure bonds. Perhaps on the debt side, this is more warranted. If an InVIT or and the InVIT is an easy answer. If an InVIT were to issue an instrument that is for an extended period of time, then there could be some tax rebate in the hands of the investors rather than actually in the hands of the InVIT. Those are options that you can consider. But purely on equity returns, I'm not sure there is a proper case for it at this point.
Santosh, you were earlier talking about deepening long-term bond market as well to augment the financing for REITs and InVITs. Any thoughts on that?
I mean, plenty of thoughts, but just a couple that we talk about. What is really critical is in this sector, particularly when we say sector, I'm talking about REITs and InVITs in particular. Let's focus on InVITs for a minute. What these entities need is actually to reduce the mismatch between short-term capital and long-term capital. The equity is long-term capital here. The requirements are that they become stable yielding assets over the life of the underlying contract or concession, as the case may be. When you need this and therefore make the InVIT more stable, make the returns more stable, make it a more fixed income product rather than actually variable income product, you need to reduce this mismatch between long-term and short-term. So there I see some need to do things. There are two kinds of things that you need to do. We need to find a method to enable deepening of the long-term bond markets, whether onshore, offshore, whatever the case may be. And I think that will mean two things. One is the regulatory framework. The other is finding the investors. There is a lot of Indian money which is in pension funds. There is in long-term mutual funds, in long-term insurance paper. All of this. These are natural sources of long-term capital. They like yielding. They like fixed income, long tenor assets. I think there is we should spend some time and focus on this and, deepening that part of the story. The second is the ability to access long-term foreign debt capital. Because today, if you were to do a typical commercial ECB, you can't get tenors of more than 7 years. Whereas we are talking about 15, 20 years. Entities like multilaterals who have the capability to stay invested for extremely long time can catalyze this. But ultimately, we will need to find the right answer to have genuine long-term capital that comes and sticks. This is going to be very, very, very critical. This mismatch and solving the mismatch. I think this is on top of mind of the treasuries of the InVITs. This is on top of mind of long-term investors who come in. This is on top of mind of even short-term investors saying, is this going to be refinanced in 5 years or 7 years? So till now, luckily, things have been good. But I think we need to put some thought process into how do we make this long-term stable market, arrive.
Do you see any of that happening in budget 2023?
So I do hope that for long-term debt, there is something that comes in. But it's more about deepening the bond markets. It's more about finding the right investors. It's about potentially allowing long-term investors to come in and stay invested or take their money out. Finding some methodology for doing that. That is really what we need. I think to start with, let's allow some more capital raising. Let's allow ECBs and InVITs. Let's allow ECBs in REITs. Let's allow some, domestic long-term capital to come in REITs, whether it's bank or otherwise. I think once we start that process, I think we will probably know what are the next few steps. And then when you see interest from global capital and what's happened in other jurisdictions, that can be the seed.
Sure. We'll close this discussion here. Kranti, would you have anything to add as closing comments?
No, thank you so much for the opportunity. Nothing more. Actually, we've covered most of the important things. Thank
We'll
you.
hopefully talk more about REITs and InVITs after the budget. Santosh, Kranti, thank you so much for joining us today.
Thank you.